Robert, thanks for being here today. As folks who follow this show know, I'm Jay Rosenthal, co-founder of Cultivated Media, the host of this program called Cultivated Live. You, Robert, are the CEO of FLUENT, and you've had a very big week. But before we even get to that, I'm based in Toronto, you're based in Florida, and it's very obviously that the sun is shining on your face. So for everybody here, we are disapproving of the sun on your face as we enter the depths of winter. But thanks for being here.
Well, thank you, and thank you for having me. And I'm not disappointed that I'm the one sitting in the sunshine. So Florida is a good place to be this time of year, and others as well. So come on down and visit us.
Well, I am. I'm not staying with you, but I am coming down on the 27th, which is when a lot of Toronto starts waiting very early in the morning to fly down to Florida on flights that are almost inevitably delayed because of the weather. But thank you for making time today. It's been a big week for you, Robert. Let's call it a business combination between FLUENT and RIV Capital. Talk a little bit about that and what it means to the company.
Yeah, so it is a big week, and we're super excited. About a year ago, maybe a little longer, we had done really well as a company, and we had reached what I would call the apex of our ascendancy within the footprints that we had. Texas has its political struggles. Pennsylvania, our format and footprint was small, but Florida was our big driver, and we started looking for a target that met certain criteria, and RIV falls right into those criteria. It checked all of the boxes except the issue with the Hawthorne debt, and we were able to roll up our sleeves and work with Hawthorne and get that resolved. And there's so much synergy. One is just the size of the state. The vertical nature of the operation is something we're very comfortable with. So becoming an RO in New York, where we're fully vertically integrated, that's what we do. And so we know it well. New York has some additional features to it with the third-party products and the wholesale that we're excited about exploring and developing. We also share, as you just mentioned, the name of this project. The covert name was Project Snowbird, because we share a population of patients. And actually, it's very interesting how many patients have already started going into our stores in West Palm and Miami and asking where our New York stores are. And so we're really excited to extend to New York. We think we can. We think we've hit the market just right. That market, had a little bit of a slow start. Well-intentioned, political motivated type incentive program that was well-intentioned but not well executed. And now it's moving. And so we think we're getting in just at the right time.
Yeah. And talk a little bit about that, because Florida, we'll talk a little bit about Florida first, because for folks that follow us know that Florida, integrated operators and actually huge market, tons of patients. Talk a little bit about that, because obviously there was also a setback on the election in November. But how are you viewing Florida right now? Do you expect, continued growth on the patient front? Like, how are you viewing the Florida market now that clearly you're entrenched and big in it, but talk a little bit about sort of how that you see that playing out over the year or two.
Yeah, Florida's a big state. There's a lot of energy for growth. We did see a hiatus in the medical growth right before the election. I think a lot of people thought the election was in the bag. We did not. We didn't bank on the Amendment 3. We're one of the few companies that we did not extend financially in any direction based on that. We have a good, solid medical growth plan. We plan on putting on 5 new stores in 25. We also are continuing our expansion of cultivation, and so the growth is not going to be explosive. It's not going to be turning on 21 million potential customers as expected, but it's still going to be steady. There's plenty of map footprint left. The state is not oversaturated. However, what we're about to see is a little bit of a retraction, and that's only a retraction that's retracting back to what is and not what would have been.
Right.
A lot of operators came in, they doubled down, they put on production, they tied up a bunch of real estate for stores. And, a lot of that has to work itself out over the next 2 quarters or so. Now, this will be good for the consumer because, I think a lot of product will be dumped on the market from all this excess capacity that was built when the customers didn't come. And so it'll cause a lot of price competition. And ultimately, it will work itself out. I think it's also going to lead to some greater M&A activity that's based on the Florida segment of some of these MSOs, because a lot of the MSOs, as we've learned, we're Florida based and successful because of Florida. It is our feeder. Whereas a lot of MSOs, their feeder is somewhere else and they're dumping into Florida and they're just trying to expand and, on the hope and promise that Amendment 3 passed. And so those that are extended, we're going to see a retraction there. And so there's going to be a lot of change. Having said that, it is such a strong state. We're well suited there. We're comfortable. We're very stable. We are efficient enough to do well in this medical environment, and we're efficient enough to continue to deal with the winds of competition that we anticipate coming. We're going to reduce COGS by another 8 to 10% over the first part of 25 in anticipation of maintaining margins.
It's I will say my folks live in Lake Worth, Florida, and Fluent is popular among the set in the fountains in Lake Worth. So it's it is popular down there, as of course in Florida. And talk a little bit about let's dive in a little bit more about New York as well, because obviously the footprint there is about to be sort of combined with what you're doing. Will you be adding the brand there? Will it be like how do you extend the brand north to compensate for that?
Right. So one of the projects we were working on that had been initiated prior to the RIV even being contemplated is kind of moving to a house of brands. You know, the direct integration requirement of Florida, along with the really strict merchandising and marketing rules, kind of drove companies in Florida to be both the retail brand and the packaged goods brand. You know, Fluent Flower, Fluent Edibles. And, you know, as we have now started to grow and have more experience in other states, we're trying to get into the Fluent being the retail brand. And so this actually fits very well. So when we come into New York, you know, and very quickly, we're going to change the retail brand of Etain. And so Etain, which was the operating entity, they were doing the same thing. They were both their retail brand and their packaged good brand.
Right.
And so we're going to continue this house of brands development there. So Fluent will become the retail brand. We will move Etain back to being one of our packaged good brands. It is, you know, going to be part of our wellness line. They've developed a good reputation for wellness in the medical market. And then we will continue to expand. When we launch other products in the market up there, though, they will be launched under our sub brands. For instance, we have already launched our Moods brand, which is our developed brand, and it's doing great. It was really comforting for us to know that we could be successful in New York with an established, successful product in Florida. And so the store names will change. We're going to paint them all that beautiful yet very ugly yellow that we're known for, and the name on the shirts will change. But you know, Etain will pull into a packaged good, one of our many brands.
It's interesting because we often talk about neighboring states, obviously, you know, New Jersey, New York, Massachusetts, even Connecticut, and but we often don't talk about the sort of go-between between two states that are not contiguous. But if there are two states that are actually non-contiguous that have more, I don't know, dual residents or people spend more time than Florida and New York, I don't know what they are. And so actually when you touched on those things, I actually hadn't thought about the brand traveling back and forth, north and south, Snowbird. But it does make sense. And those two states certainly, you know, people do travel. You know, the population of South Florida, certainly Southeast Florida, becomes very much New York centric as we go into the next couple of months.
And because Fluent didn't, you know, we didn't early convert into a recreational adult use concept. We've stayed true to our medical roots. And that's part of, you know, being kind of not the first to advance on the Amendment 3 proposition. Whereas a lot of our competitors in Florida have come in from a recreational or adult use state, and they bring with them that look, that appearance, that ethos. You know, we're still basically medical at heart. Coming into New York, one of the big issues in New York is when they flipped to AU, all the medical patients were very concerned, and even the regulators were very concerned that there'd be an abandonment of the medical program. But we're going to serve our medical patients in both New York and Florida now. And so, you know, we didn't get away from that. And so we will even likely expand and open medical stores in New York, which is kind of unheard of right now.
I'll say.
Because there's jurisdictions that, you know, medical stores could provide much needed care and products. And so we have a plan. We know medical well. It's the adult use we're learning. So we're learning the other side of it.
I want to actually shift to that medical side, because the other states where you're operating or look to be operating, sort of Pennsylvania and Texas too, talk a little bit about sort of that, because Pennsylvania, certainly I'm hopeful. I know the governor in Pennsylvania is hopeful, but seems to be the next big state potentially to increase the size of their cannabis market. But talk about operating there, and maybe even touch on sort of Texas and what the future may hold down there as well.
Yeah, Pennsylvania is being given by the odds makers a much higher odds of flipping to adult use in 25 than Florida ever was. Florida, when asked, it was hard to tell just for someone to say that 60% mark was an absolute, but everyone's really giving high odds on Pennsylvania flipping over. Our 3 stores in Pennsylvania do very well. However, they've always been kind of a placeholder for us. And if you think about the New York transaction, we've obtained the license, we've obtained the right to operate, but we also, we bought a decent amount of cash. There's $34 million coming over to our balance sheet in this transaction. And so we'll use that cash to deploy and grow in Florida, but also, we're going to start turning our attention to Pennsylvania and expanding there. We really enjoy the Pennsylvania market as far as it's embracing cannabis. It's a blue collar state, high wage earning blue collar state that really embraces cannabis, and it's going to take off. I mean, it's going to take off, and we need to start focusing and get our footprint expanded. Unfortunately, the evolution of both the rules there and the packages of 3 and what was, I guess, an artificial limit of 12 stores that no one paid attention to. There was a lot of movement in the last couple of years, and we've been watching it, waiting to get in, but it didn't seem like a safe time to get in. And now we're a little bigger, we're a little stronger, we're a little more fortified, and at the same time, there are opportunities being created in Pennsylvania, and so we're going to start really focusing.
Yeah. I mean, and also, I think the clock is ticking for states that are completely surrounded by adult use to get on the ball or lose tons of money in terms of tax dollars. There was a story last week about the number of Wisconsinites heading to Illinois to buy cannabis, and certainly they'll be heading to Illinois, they'll be heading to Minnesota, and states that are nearby are going to start losing more and more tax dollars, which I think the governor in Pennsylvania is keen not to have happen. Talk about, we're standing, I guess, a little bit more than a week away from 2025. And it's my belief that 2025 is going to be a seminal year for cannabis, not only because states like Pennsylvania may go, New York is going to grow a lot. Even as you're talking about Florida, I think the patient numbers are going to continue to rise. How are you? Do you think there's something dramatic that's going to happen in 2025, whether it's rescheduling or safe banking, that will have a major impact on the industry that we'll be talking about, 365 days from today?
I think so. I mean, we look at the new administration coming in, the rescheduling efforts have already been commenced. The hearings are already going to be processed in January. It would be very hard for a DEA that's taking their job seriously to maintain a Schedule I listing. No scientific or medical purpose. That's just not even reality at this point for this particular medicine. And so it's going to be rescheduled. That kind of neutralizes the need for safe banking, which will be about the time that it's successful, right? When it's no longer really needed. So everyone can claim a win after the horse has already left the barn. And so I think both of those will occur in 25. If you listen to anything about my Amendment 3 concerns, I have the same concerns about rescheduling. What next? What schedule we fall on? Does that mean we're regulated by the FDA? Are we a pharmacy now? There's a lot of good to it. It probably relieves us from 280E liability, which is one of the biggest constraints on growth in the industry. It does allow us to access capital. Right now we're still very limited in the amount and type of capital. We can only access high risk capital. These are all great things. What regulatory overlays it adds, how it impacts interstate commerce, and what that means for opening up this. These are challenges that this, industry, which is still in its infancy and really hasn't even started yet, are going to face as these events come down. And so, as with anything, it's just not that simple. We can't say it's good or it's bad. It's really has some goods to it, but it's had some concerns that I don't think we've really been able to just digest what's going to happen. But change is coming. The other thing is the retraction of these businesses. We're seeing a lot of businesses start to not be able to hold out any longer with their business plans and business model. A lot more starting to turn up out of their 1.0 evolution, and they're going to need help. And that help's going to come by either their lender taking them back or there's an M&A transaction. Consolidation in about mid 25 is going to be red hot. And it's just going to be finding deals without excess debt. And even those that have debt, the lenders are stakeholders. And we see that a lot with facilities that are overbuilt or overpriced. Ultimately that lender, they're in the same box as the borrower. So that's going to be the interesting part.
It sounds like there will be a lot of news, a lot of action, a lot of things to talk about. We hope to have you back in 2025, if not mid 2025, you just mentioned, maybe before, to talk sort of how things are going in the states we talked about and how things are going with Fluent and RIV as a combined entity. Robert, I want to thank you for joining me on this last day of our program till 2025. Good luck in the next couple of weeks, and we'll connect with you in 2025.
Okay, look forward to it. See you then. Thank you.
Thanks, Robert.